Hey traders, welcome back to the channel. In today's video, we'll take a look at the beginner's guide to day trading strategies. I'll go over 3 commonly used strategies, I'll provide clear examples, and I'll go over my favorite strategy at the end. If you haven't already, make sure to hit that thumbs up, subscribe, and hit that notification bell to stay up to date with all of our new videos. The first strategy we'll take a look at is the EMA pullback. This is that exponential moving average pullback. Commonly used EMAs are the 9 EMA, 20 EMA, 50 EMA, and 200 EMA. For this chart example, I went ahead and color coded each one of those EMAs. Our purple is our 9 EMA, the yellows are 20 EMA, the reds are 50, and the blues are 200. We're looking for a break of that yellow and purple to then hold those levels as support. We can see here we broke that level with volume, pulled back, and never closed back below. This is our buy signal. Then we scale out into profit on the way up. Most traders like myself will take that profit, but if you stayed in the trade looking for continuation, you could always look at the cross back below that level as a bearish signal. To keep it simple, we're buying in this area here. As soon as it breaks that area, we bail on the trade. That's using the EMAs to enter and exit out of our trades. Now a quick recap, commonly used EMAs are the 9, 20, 50, and 200 EMA. Traders use EMAs as entry and exit indicators. EMAs are not to be traded alone, and volume and price action is always number one when day trading. Now, let's have a look at the second day trading strategy, the RSI oversold or overbought. So for those who don't know, the relative strength index is a tool used by traders to measure if a stock is oversold or overbought. If it's closer to 100, it's overbought. If it's closer to 0, it's oversold. Now, I know this can be confusing, but let's take a look at the chart on ticker PXMD on the 1 minute time frame. This green line here, that's the RSI. That relative strength index, when it dips below a certain level, becomes oversold and offers us a buy. As we can see here, those buys resulted in a nice little return back to highs, and it made for a nice trade. Now, the opposite's true as well. If the RSI becomes overbought, it will actually retrace from those levels. So it's basically a meter to determine if the stock is oversold or overbought. Now, if you're anything like me, I prefer to have a clean chart when day trading. I don't really like to have that RSI on my chart, although I don't want to miss out on those plays. So I went ahead and built an indicator for all of our premium members on Discord. This BBRSI indicator is designed to plot little green arrows whenever it's oversold. This will allow us to catch those plays in real time without having that clutter on our charts. This is available to anyone with TradingView. Let's do a quick recap on the RSI, oversold and overbought. RSI is the relative strength index. It's used to measure if a stock is oversold or overbought. Generally speaking, the RSI under 30 enters oversold. Anything over 70 enters overbought. The RSI is not to be traded alone, and volume and price action is key when day trading. Now for the strategy that I use every day in my own trading, the confirmation strategy. This strategy requires some form of support and resistance. It looks for a close over resistance for a buy signal and a close under support as a sell signal. I went over in one of my past videos on how I find support and resistance. I use higher time frames. When I find those levels, I then use these key levels to trade off of throughout the day. We got PXMD hitting our scanners and giving us an alert. I pull up the chart and see we have predetermined key levels. Now that I have these levels marked out, I'm looking for a close over that resistance to make my trade long. If we can hold above that and not close back below in our stop loss area, I'll go long and look for a target above. As we can see, we hit our target above and got our sell. That's a target hit. Now, we also had another candle break another resistance. We could choose to go long here, although we already made a trade, so maybe a reduced size order. But as we can see, we hit our next target. So smaller gap, but it still worked out to be a successful trade. This is using confirmation trading. Now, there's a number of reasons why I love this strategy and use it every day in my own trading. One of which is it can actually help you avoid major losses as well. So as we can see here on ticker DRUG, we have these predetermined levels. This top key level would act as a resistance. If I'm looking to get in my trade, I'm looking for a candle to close over that resistance. We can see it never happened, which means I didn't take the trade and I avoided a major loss. This is just one of many reasons why I love this strategy. So to quickly recap, confirmation strategy requires some form of support and resistance. Often traders use higher time frames to find these key levels. A candle that closes over resistance is bullish, and a candle that closes under support is bearish. Looking for a great team of traders? Well, look no further. We have over 300 members in our Discord and growing. We have live day trading every day, custom scanners, and more. Thanks for watching. I'll see you in the next video.